So this deal also fits into Brookfield's kind of continued capital recycling strategy, where they take some of their assets that they've held for a period of time, for example, their Chilean toll road business, that when they reach close to fair value, Brookfield will realize those gains and then recycle those assets into new investments. Genesee & Wyoming is one of those. They've also been doing some further investments. Another one of those was they acquired Vodafone's telecom business in New Zealand. Can you break down kind of how that fits in to Brookfield's investments and maybe how this capital recycling strategy is continuing to play out for the company?
Yeah, so Brookfield, they're really smart about how they go about funding their business. They'll look for opportunities to kind of cash in on things that the market or other buyers value higher than Brookfield does. So they'll sell those for kind of, above fair value, and then they'll use that to buy things that they see, it's kind of underpriced. Maybe it doesn't fit in with a bigger business. And that's kind of what you see with this telecom business in New Zealand, where it wasn't part of Vodafone's, massive global strategy. It was but it's a good business for Brookfield because it fits into one of the four kind of components that they invest in, which is, they have the energy businesses, the utility businesses, transportation, and then data infrastructure is kind of like their new platform that they've been building out. And this is data infrastructure. This business owns cell towers. They own fiber optic cables, but it's also a little bit different from just the infrastructure because it's got the consumer component, because they also provide, like cell phone services and broadband to customers over there in New Zealand. So it's a little bit of a blend business for them. It's an integrated business, but their whole, focus is on data. They see data as being this, this huge growth opportunity because we just continue to use more and more data, especially mobile data. And so they're building out this platform to kind of capture different aspects of it. Cell towers is big. These fiber optic cables, which you got your broadband on, and that data center. So it fits into that. They've been buying data centers all over the world, and now they've got this. And they see this as a huge growth opportunity because not only do they get the growth in the acquisitions, but the organic growth. They can raise prices. They can build out new cell towers, build out new data centers. So it kind of gives that dual growth driver that they're looking to kind of juice their returns with.
Right. You look at the way the cell towers and data centers fit, to transmit data and to, continue this progression that we've been on, you have to have this infrastructure to just communicate and allow data to transmit. It's the same thing when you look at Genesee & Wyoming, right? For our continued move into e-commerce and buying things remotely, you need more and more logistics. And so Brookfield Infrastructure can kind of get in the middle of that, extract a toll, and continue to drive cash flows. And that's the whole idea behind this continued capital recycling strategy, is to continue increasing cash flows and distributions over time. As you see, those opportunities as they continue recycling cash flows. What opportunities do you see for Brookfield to continue increasing its distribution going forward and just continue returning capital to investors as it continues its capital recycling program?
Yeah, the reason they're selling these assets is that they see a lot of opportunities in infrastructure. There's a huge gap between what governments can fund and what they need to fund. So one of the ways that they can do this, and the same thing with private businesses, is to sell assets. So Brookfield will sell something that like a private equity fund or pension fund would really want for a premium price. And then they'll use that to kind of fill in these gaps where it's a business that really fits in well with their infrastructure portfolio. And some of the places that they're looking at is they're looking for this, or where they can not only buy something that's producing cash flows to fund the dividend, but that can grow organically. So they're looking at water. They see water infrastructure as being a big opportunity for them. They only have done I think one $15 million deal for a water pipeline in Peru, but they would love to get into more water. Midstream, U.S. and North American midstream, which is pipelines, processing plants, that sort of stuff. They see, I think it was $150 billion opportunity over the next several years as MLPs consolidate and they need capital. They own some of these assets, but they see that as another growth thing. And then in different countries like South America, we mentioned they've sold assets in Chile. They would love to buy more assets in Chile, and India is another place that they see growth. So it's a cool business to own because they're into so many different things, and you get to see it's kind of the backbone infrastructure growth of these countries, and they're very cash flow driven, so they can pay these great distributions that they'll continue to grow.
Yeah, I think Brookfield Infrastructure provides the services that allow the things that we really think that the world is heading towards, whether it's continued e-commerce, whether it's more and more data usage. They provide the infrastructure that allows that to happen. And if you're an investor and can profit a little bit from that continued progression, definitely an interesting business to be involved in.